We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. We are snorting cap rates, shooting up cash flow. Here today with co-host Trevor Howard, Mike Nuss, and Dane McKinney. We let Dane out of his little cage. He can reach the mic now, so you will be able to hear him better in these episodes.
I'll be loud.
Today, we're going to talk about a couple of things. I think that we were all friends before we came in the room today, but we're going to talk about the Fed, how it got started, election years, what's happening with interest rates, and we'll see if we're all friends when we leave this episode. It's going to be a friendly conversation. So with that, I'm going to turn it over to Mr. Mike Nuss.
Are you kicking it off with the conspiracy theory?
Our local expert. He's going to tell us. You're going to tell us your conspiracy theory of why they created why and how they created the Fed.
Yeah, well, it's election year, and when people go a little kooky, it's only February. I've already heard the kooky statements like it's an election year, the Fed's going to do this, it's a political year, they always got to do this. And my friends over at the Drunk Real Estate Podcast had a really good session, brought up all these statistics on election years, economics, recessions, and there's some really good information in there. I don't want to get a whole lot into it, but one of the points and one of the things we hear a lot is the kind of consensus or sentiment amongst people is that the Fed supports the incumbent during an election year. Like we don't want to be in a recession. They're going to lower interest rates. They want the economy to be good during an election year. And Jay Scott, one of the guys on that podcast, is actually one of the people that support that. I don't believe in that at all. I think it's complete bullshit. And he actually laid some stats too and said, maybe I shouldn't believe that as well. So he went into some stats, and what I really wanted to get into was my conspiracy on why the Fed was actually created, because it dovetails into that and that thought process of people, voters vote with their pocketbooks. Well, the Fed's job, it was created to make us happier. That is literally the reason the Fed was created, was to make Americans happier.
Is it working? Are we happier?
I think
you
so.
give your thoughts. I agree.
Yeah.
But I shouldn't say I agree. I can spew the words that my economics professor in college said, but you
well, maybe you should go there. What?
Well, so his argument was that nobody's wage ever actually increases, which obviously once you look at somebody who's
inflation
on a salary, your wage is just increasing at the same rate as inflation, and your purchasing power
just like property values go at the same rate as inflation.
Yeah, yep. But he gave the example of, hey, when I started working at a university down in Texas, I had 10 years of experience and was all these qualifications. I had worked there for about 2 years, and they were trying to build up the economics department, and they brought in a guy who was way more qualified than me. This is what he's telling us. Mm-hmm. Okay, yeah, cool, whatever. And he goes, and this guy had apparently, after he got done with the interviews, discussions with the dean of that college about what he would want to get paid to be there. And they were kind of asking what he had gotten paid before, like, where were you at? Do you want, X percent over that? And he said, I don't care as long as I'm making $5,000 more per year than whoever's second in this college. He said, whatever professor is getting paid the second most, I just have to be X. I don't know if it was actually 5,000, whatever. But the moral of the story was that he was like, I don't care how much I am making as long as I'm making more than the people that I'm around. And the other argument is like, I don't care how much I'm making as long as I make more than I made last year. Yeah. And you're not thinking about how much harder it is to buy groceries or how much harder it is to buy gas or how much harder, because you're going to your job every day. Yeah. But
so my premise is completely different than that.
Oh, well, that was my premise, was that their goal is to keep it right at the rate where people can see a noticeable increase. But it's controllable.
Gerbil, psychological, human sheep type stuff going on there. Is that what you're getting into?
I didn't say it.
Okay. Okay. Here's why the Fed was created. So do we know when the Fed was created?
When?
Yeah.
Yes.
No.
Right after the Great Depression?
No. Right before World War I, 1913.
Really?
Yeah. Okay. So what is the Fed? It's a bank. Who's it a bank to?
intermediary?
Our government.
The government.
Right?
U.S. government.
Right. So the bankers at the time, J.P. Morgan, Carnegie, they go to our government and say, hey, you guys need a bank. We're going to be your bank. The problem was the government wasn't a reliable reliable creditor. Debtor, creditor, right?
Lending or borrowing?
Borrowing. They weren't good to borrow from, right? So what does a bank want from the people that work with the bank? They want your deposits and they want you to borrow money. But what was the problem with the U.S. at the time?
Were they not taking taxes?
In 1913, there was no income tax.
No income. Yeah,
right.
No
and so the government's income was based off taxes on tariffs and goods. And so what the problem is that shifted most of the tax burden to laborers, made lives of Americans really difficult. That's why you had the Boston Tea Party in 1773. So a genius solution of the bankers, the rich people at the time is, hey, here's the smoke and mirrors we're going to do to shift some stuff around to make the average American's life easier. We're going to create a bank for you. But here's the problem. You're not a really good person to lend to. So you're going to create an income tax. So the federal income tax started at the exact same time as the federal bank.
Is this your conspiracy?
This is my conspiracy theory. Okay. So it leads into all this stuff.
So at the same time we got income tax, we got the Fed.
Yes, this is facts. This is not a conspiracy theory. Okay. My conspiracy theory is the banker, you want someone worthwhile to lend money to. But the government at that time wasn't worthwhile to lend money to because they didn't have a reliable income. So their credit rating wasn't good. So now you created a federal income tax, and now you can tax anyone and everyone. And they stay at what was sold at the time politically, it was now you can tax rich people. So you can shift the tax burden away from the laborers more into the rich. You can make it more fair, yada, yada, yada. So what the reality is they created an income stream, improved the credit for the American government, and now we're able to create credit, which is our modern day printing system, right? And the actual side effects of when the Fed were created was our business cycles up until the Fed was created were very, very short. You're in an expansion, contraction. The average business cycle was very, very short, like less than 4 years. I don't have the exact stat. The stats I know that I'm going to go off of are from Daniel Ammerman. So from 1854 to 1946, the average business cycle changed right after 1946. From 1946 to 2018, the average business cycle now, the expansion period is like 85% and the contraction period is 15%. And it's an average of 80 months now. So the average business cycle is now 6 years, when prior to that it was less than 4. So what the Fed has done is expanded the business cycle in total length. And in that period of time has actually shrunk the contraction cycles and expanded the expansion cycles. So what does that do? It makes us happier because we're happier during times of expansion rather than times of contraction. But what does it also do? We're more taxable during times of expansion. So there's more ability to tax and create government income, which makes our government a better creditor, which allows us to then give them more credit, aka print more money, which, as we've talked about before, goes into assets. So when you go into this sentiment of voters saying, well, it's an election year, the Fed's now going to help the incumbent by making the economy good. If you actually throw math to that, it's their job to make us feel good 85+% of the time based on those numbers from 1946 to 2018. If we actually change that from 2000 to 2023, it goes up to more like 93%. If you figure out the number of months in an expansion during a cycle versus the months in a contraction.
So you're saying that it's not a coincidence. It's not a coincidence. 93% of the time, they're there to make you happy.
Exactly.
And so it just happens to be it's an election year. Now, in my view, it seems like election years are always kind of screwed up a little bit. Like Are election years, how are they different from other years? I mean, the sentiment is more like, in my world, is that people sort of pull back and they're scared about what's going to happen next because it's like the devil, right? Like we don't know. We know what we have now. We don't like it, but we don't know what we're going to get next. And we may like that even less. Mm-hmm. And so at least from an investment standpoint, a lot of people will sit on the sidelines and maybe they just use that as an excuse of, well, let's wait and see who makes it into office. And then I'll make my decision if I'm buying it.
Yeah. And that was the leading stat that AJ started that conversation off with, was the difference between Main Street and Wall Street. So Main Street pulls back. That's the sentiment. That's the mindset. And even the Fed pulls back. Like you can see they want to have less involvement movement from an interest rate manipulation standpoint in an election year, because they want to be seen as neutral. And if they are making activity, they're not seen that way. But if you actually look at the stock market, I think that was the 83%. So 83% of the time, the stock market goes up during an election year.
Okay. All right. Which the stock market is a different metric to follow than
yes, correct.
Main Street. And that's a whole nother conversation about how, everybody's feeling like we're in a contraction now, but the stock market is hitting record highs.
Correct. Yeah.
What's the mechanism that you're saying changes the business cycle from whatever you said it was? You said 4 years.
Define. So that stat came from Daniel Ammerman, who pulled it from something else. So I imagine they're using it from the Ember rating, which is the recessions, right? So they're like, here's the beginning of the recession. Here's the beginning of the next recession. That's the business cycle. This amount of months in contraction, this in expansion.
So are you asking what made it longer?
Yeah. So your point is the government tried to make it longer to make us happier for longer.
Yeah. Well, the Fed's manipulation post 1946, and 46 is a big key because when the Fed was created in 1913, up until the 40s, they worked in cahoots with the government. And so the decision-making process was done in conjunction with the government and the Fed. And in the 1940s, after the Depression, the Fed wanted autonomy. The Fed wanted to pull away, and there was actually voting that was happening, laws that were passed, and that's in the 40s when their mandates were created. So there are two mandates: maximum employment, right? So maximum employment, and then price control. So they want inflation, but not too much inflation. So what do they want? They want an expanded business cycle. That is the those are the two parameters that create an expanded business cycle.
So why wouldn't they want us happy all the time? Why does there have to be a contraction?
Think of the mentality of our leaders in the 1940s coming out of the depressions. It's just built into our psyche that stuff has to go wrong. But when was the last time we had a recession? I don't count COVID 2020 as a recession. I don't count that as a recession.
No.
So we're 15 years, in my opinion, we're 15 years into a happy cycle, which is also happens to be 15 years into modern monetary policy tools and implementations. And so there's a whole nother discussion on that. So why don't they want us to be happy all the time? I think the Fed sees that, that's where the runaway inflation comes from potentially. You got to draw that back. And so that's where increasing interest rates are. But we haven't seen them increase interest rates in 20 years.
So I have a different conspiracy.
Yeah, let's hear it.
Conspiracy theory. So I believe that there are powers to be bigger than politics and the Fed that pull the strings. And I believe that these folks like us want to stack their asset column in a much bigger way than we're doing it right now. And the way to do that is you have to have expansion and contraction. And so you have to pull those strings. And this is a question that I asked Dane and Trevor, actually, when we were at your meetup in Portland. I said, what would we do if we were the Fed? Or what would we do? What would we do if we could pull the strings on the Fed, right? What decisions would we make? And if that's something that we could actually, you trying to turn me up there? I'm not loud enough today.
Turn Gabe up in our headphones. I like hearing Gabe yell.
He wants me to yell this at him.
Yeah.
So if we could pull the strings on the Fed, what would we do selfishly to manipulate pricing so that we could drive asset values down and go suck up as many assets as we could and then turn around in the expansion and go sell them again? I mean, I'm not saying I would do it. I'm just saying if I had the power to do it, it would be something I would consider. So if somebody actually does have that power to do it, was to say that they aren't controlling these cycles.
Well, the closest correlation or direct correlation between Fed activity and valuations in the marketplace are assets. And so that is, yes, the Fed movements they affect assets more. So what would they do? What would I do? If I could push the button, exactly what they're doing. I'd actually probably pull more liquidity out. I'd probably increase interest rates even more, right? Because what do we want? We want a recession to make those asset values go down. But we also want interest rates high enough that makes people struggle. We don't want them to reverse interest rates right afterwards because that's the rescue machine. And so what I think the Fed is going to do is they potentially want to crash it and then rescue it. What we would want to do is crash it and not rescue it until we're done hoarding assets. If we're just the mean manipulative a-holes. Did I just go down that rabbit hole? I feel, just so everyone knows, that's not me. I don't think like that. What are you doing to me, Gabe?
Okay, I'm going to ask another.
Megamind.
Here's another interesting question. So we talk about them wanting us to be happy. So why don't they keep inflation at zero? Why do we have to have any sort of inflation? To me, inflation is like a hidden tax. Mm-hmm. They're lighting the value of our dollar on fire. And so, like Dane was saying, the more I make, I feel like, I made more than last year. I made more than my colleague, but I still go to pay for my bills, and I end up in the same place. So we sort of everything sort of raises, and I guess it inflates at a different rate. But really, I mean, do we have to have inflation?
So inflation is a big component of GDP expansion. And the bigger your economy gets, the harder it is to make your GDP grow. So if you don't have inflation, you're never going to see your GDP grow. It's part of the component or discussion of it. The other part is
there couldn't be enough goods, and we couldn't create more. We couldn't manufacture more, create more services. Because to me, the inflation is...
so think of it this way, like if you go from 10 goods to 11 goods, you just increased it 10%, right? But if you go from 11 goods to 12 goods, you just increased it less than 10%.
Okay.
So as those numbers grow, as you're producing and your economy's so big and your production level's so high, to increase it 1% is exponentially more difficult than it was years prior.
So they say that inflation is too many dollars chasing too few goods and services, right? So the balance of that, which I think we might be experiencing right now coming out of COVID, is that we have more goods and services that are balancing out. So if we are creating more, that allows the Fed then to turn the money printer back.
Correct. Yes.
And so then that allows them to lend more money.
Correct.
To the government?
Yes.
Okay, so we need the production to allow them to hit the money printer, because otherwise, if they turn it on and we don't have the goods and services, the value of the dollar goes to
shit. Yeah,
which has happened over time.
And we spelled through COVID.
Through COVID.
Yes.
Yeah. Well, when they printed $6 trillion and 40% of all of our money that got printed.
Well, it was more, and even more the stimulus checks so you gave money without productivity.
Hang on. Yeah.
Double. It was a double whammy.
Let's clarify there. The
you gave money to spend without productivity being created to earn that money to spend.
There was $2.8 trillion that were given out when we were in a dip. And when we're in dips and we push money out into the economy, that's great.
Yes.
That fuels growth.
Yes.
That stimulates the economy. We want that. The problem wasn't the first 2.8.
No.
It was that we got in that little pattern.
It was
where we
Trump's
were like,
last trillion.
Well, actually, it was Biden's first trillion.
It was the combo.
It was when we were out of COVID. I mean,
do you remember how crazy Trump went right before the election? And now he's like, printing presses. I want everything printed.
Okay, but wait, I gotta stop. I gotta stop you guys. I gotta stop. We're gonna end this podcast right now. Okay. In the beginning, you said that the Fed is not manipulated by politicians and that they're autonomous.
Yep.
So how does Trump get blamed for hitting the money print?
Yeah.
Because he just by the pressure he's putting
the spending packages that they passed.
Okay, we'll go back to Dane. You can talk about spending packages.
Let the thought finish.
Go ahead.
It was when we had exited the perceived recession that wasn't actually there. There was a huge dip in the economy. Part of that was fear and sentiment, but then part of it was actually the labor force kind of slowing down because everybody went home. And then we got out of that, and it's like mid 2022, and one of my buddies shows up at work or wherever we're at, and he's like, "You get the most recent check?" And I was like, "What?
Round 2?
No, it's like round 5." And I was like, "What are you?" And at the time, I was just kind of like, "Well, that's sick," because we're all working all the time, and everybody's like, life is you. If Oregon wasn't wearing masks, we didn't need another stimulus check. Oregon wasn't. We weren't wearing masks anymore.
That's a good barometer.
That should have been the standard. The standard was everybody in Oregon was back at work. Everybody was doing. And then we got another check, and that was 1.9 trillion into the economy. when the economy was already doing good.
Yep.
And that's what kills the supply chain, is because you're already at maximum production. You can't produce it.
Yep.
All the factories are full, everybody's working, and then you give us $1.9 trillion and everybody says, well, let's go spend it. But we were already spending and we didn't need it.
And that's why I don't believe COVID was a recession. So we shut down the economy, had 2 negative quarters of GDP that were way down, and then the following 2 quarters were way up. And the way up, I think, was what, 3 or 4 points higher than the way down, and then it continued to go up. More spending packages. Should we move on to the next thing?
This is my same critique. Appraisers. We talk about appraisers. Since Mike's an appraiser, I got to dish on him a little. So
former appraiser,
former hall monitors of the market, baby.
A recovering appraiser here in the audience. This is the same critique I have, is that they're working on old data.
Yeah.
So they're trying to drive this huge ship, and rather than charting this course and knowing exactly where you sit, you only know where you were a few months ago, and not really able. It's not very nimble. It's not very efficient, and so you're making decisions on old data that need to be really made in real time. And so we see it on the street. Dane and his buddies are making money, and they're working, and nobody's wearing a mask, and then they're mailing us another check. And I think that just shows you how slow that money had already been earmarked to go
8 months
to
before.
us several months earlier, but it takes a while to get it there.
Excellent point.
Okay, so you want to shift gears?
I'm so fired.
We're all still friends for now.
Yeah, I'd reckon. No, I'm not fired up at you guys.
Trevor's over here like, can we get to I just want to be selfish. I just want to know how to grow my business.
I have another question. I have a question. Okay, go ahead, Trevor.
So, given you know all this information, why does it matter to you, and what do you do with it?
Yeah, you economist.
Like, how does this help me do more deals?
He's an appraiser.
Because I want to have posts on my Facebook page that document that I'm a really smart guy. I can go back and say, see, on December 6th, I said I was right, and everything now points that I was right back then.
Trevor, it's the meaning of life. It makes Mike happy.
So I can make decisions on when to buy and when to sell. I want to know when I have leverage as a buyer. I want to know when I have leverage as a seller. I want to know when I'm losing leverage as a buyer, when I'm losing leverage as a seller.
And that's because you're more of a trader.
I'm a trader. Yeah. I am a developer. I'm a trader. I do more trading than you guys. So you guys don't care. And that's going to be fun when I interview Gabe, because Gabe is not a trader, right? He's purely 100% investment. Not this Gabe, the other Gabe. Yeah. But you're kind of like that way too. You're just more purely investment minded. Whereas, so market conditions don't ever fucking matter, right?
Just at the time of.
Yeah, exactly. But as a trader, I have to see where they're going, because I'm making decisions I'm buying on these market conditions, and I need to exit, or I need to reposition or refinance on this.
That sounds a lot more complicated. You should stop trading and just hold.
Well, I told you that after listening to Gabe's deal, episode 3.2 for people listening, it changed my mind. I'm going to shut my business down now. To my staff who are listening, just don't listen to this episode.
We're just shifting direction.
We're no longer developers. We're purely investors. You're no longer needed.
Wait, so
you'll need them to buy all the deals. You got to have people.
I think you track it, Gabe. Obviously, you're tracking where the economy's been and where it's going.
Not really. I don't believe anything I read. When I track is I look at so Mike and I are similar in this. When he says, the headlines, look at the headlines, and what I see when I read a headline is the first question I ask is, what are they trying to lie to me about?
Right.
So they're clearly trying to steer public perception and investment and everything that we're doing by the propaganda that they put out. And so to try to weed through that and figure out what's really happening, it's kind of sad that it's this hard to try to figure out what's really going on. But I do pay attention. I do watch what's going on, but I don't trust it. I do believe that there is an engineer, there's an architect behind all of this. and I don't exactly know. I don't exactly know what they're doing or when they're doing it, but I do believe that if we can figure out what their goals are and we align ourselves with that, that it doesn't really matter who these people are, as long as we're making the same moves they are, then we'll come out ahead. And so that's why, like Paul Curley would just say, well, it's all bullshit. I mean, we don't get too wrapped up in 83-month cycles and the Fed making us happy and all that. You just know that if you buy the deal, and today as the market is up and tomorrow the market is down, you just go buy another deal. And then the market goes up and you just buy another deal, and the market goes down, you buy another deal. And then eventually you wake up one day and you've got all this equity, and then you decide, well, maybe rates are a little high and maybe I want to refinance or maybe I don't. I mean, like, it's a different game to be somebody who's just hoarding real estate versus somebody who's really trying to take advantage of the cycles and trade and create an income stream. You're looking for cash flow from the trading, acquisition and disposition that you're doing.
Yeah, like great example is you own your businesses, you own SMI, you create cash and you trade that for real estate. I have a development company to create cash, and I trade that for real estate.
And I oftentimes say, I don't care if the market's up or down as long as people are trading.
Right.
I want people buying and selling because that's what we get paid to do is to facilitate those transactions.
And then the youngins they're making their income in brokerage. But I'm a firm believer of make your income in the industry. That way you just spot the deals, and because the people making their incomes in the industry are getting the best deals.
Yeah, you're just in it every day.
Yeah.
Yeah.
Well, that's the only reason I joined. I do love brokering, though. Yeah.
Do you really?
It is pretty fun sometimes. But that was a little tongue-in-cheek. I won't lie to you. I like buying deals. It's more fun to do your own deals.
Yes, it is.
But if you set a client up with a really good deal, few things more satisfying.
There are very few things more
just
satisfying than helping someone else do their first.
I think it's more fun to broker a deal, personally.
If it's a good deal, I do too.
It just happens faster. You get a paycheck at the end. I mean, it all happens in a few months instead of several years.
I don't believe you.
I celebrate someone else.
Do you buy more deals or do you broker more deals right now?
Well, I don't have any time anymore. You guys keep me too busy.
I think it's easy to celebrate someone else's deal more than your own deal, but the process of your own deal is way more fun than the process of someone else's.
Like right now, I would rather broker a deal, but 10 years from now, I'll be thankful that I bought a deal.
Yeah,
I mean,
that's a better way to put it.
Oh, you enjoy the process of brokering a deal.
I enjoy the process.
He's sadistic.
It's not.
I don't like the chasing clients and
what's worse? What's worse, enjoying being a broker or enjoying being an appraiser?
Do you know how
Trevor,
it takes all types? Like,
do you know?
I think we should just do podcasts all day, every day.
That is the most.
Do you know why he enjoys brokering deals? Because people just call him and they're like, "Hey, you want to broker this $10 million deal for me and make $250,000 and double it and have it all lined up?"
Yeah,
and he's like, "Yeah, I'll spend 10 minutes
because it's his next down payment on the next property."
I should say I like to broker big deals. That's more
okay.
fun.
Yeah. There's a qualifier there. Yeah, I probably enjoy that process a lot more too.
Trevor, what do you got to say? Give us something
about all that.
You got a question. Steer us.
Do you like brokering deals?
I love brokering deals. So I wanted to steer us into something else. If you guys are cool switching topics.
It's Trevor's chance to be selfish.
So we all stayed friends through the Fed thing?
Yeah, that was your economic update here with the
Did
Deal
you think we wouldn't?
No, I figured we would.
Okay.
Yeah. I do have a question though. Can we stay on it just for a minute? I thought that the income tax was something that was created during or after the Great Depression, like a Roosevelt era. We were under martial law, and this is the way I've read it anyways, like the income tax is actually unconstitutional, and that it is something that was implemented at a time like during and
that's why he refuses to pay it.
I just want to be on the record saying I believe this is unconstitutional.
Taxation is theft. That's the truth. It's coercion.
So it's the 16th Amendment. It was voted in 1909, ratified in 1913.
To be for
federal income tax. That's what created the IRS and the federal income tax.
Okay.
But prior to that,
same year that the Fed was created.
Yes, same year the Fed was created. Prior to that, in 1862, it was Lincoln created the Internal Revenue Manager, so not the IRS, but a position to then implement and collect taxes on tariffs and goods.
Okay. All right. Now we can go to Trevor.
Yep.
Okay. Cool. So I don't know how.
But to finish the conspiracy. So you led to the even bigger conspiracy. So it is the people that created the Fed. It's JP Morgan Chase, the Rothschilds, Carnegie. That's what led to us becoming the world currency. If we didn't create our banking system prior to World War I, test it out through the roaring 20s, figure it out during the Great Depression, and then win World War II. After World War II, we were the only country set up that could become the world currency. And it's really from what happened in 1913 to position us to where we are today.
How long did it take for the other countries to set up their own central banking systems?
They all have them. It's just the matter of what's the credit behind them and how big is the economy.
But I mean, did they, at that point, was the U.S. the only one that had it?
No. The central banks were created around the world at that point. But the difference was our economy grew so big in the 1920s that now, and then we went through the Depression, and then we recreated our economy in the 40s for the World War, that we just had the biggest economy in the world.
Back-to-back champs.
So you said we became good creditors by implementing the income tax so then we could back it.
That's my conspiracy.
Oh,
yeah.
I thought that was fact. Sorry.
Well, I think of it. Well, no, it is
the only fact. Just the date is the only fact.
It is a fact that bankers want good depositors that they can lend money to. That is a fact. So my conspiracy is just look at this from a macro banking scenario.
So yeah, let's do that. So looking at the other countries, what do they do with income tax, and did they not have income tax, and that's why they're not as good of a creditor?
Well, you have to have the economy to support it.
That's exactly the power of our currency. Is the size of our economy is so big that everything is based on our activity. Does that make sense?
Yeah.
Like half of our corporate profits are made outside of our nation, and then half of those are made inside of Europe. So you think about how much of Europe's economy is based on what we produce. So it's the size of our economy. And what I'm saying is the fact that we grew so much so fast by the way that we created our banking system is what set us up for that.
So some people ask me about what I think of Bitcoin or things like this, and they say, well, it's just a serial number. It's just a digital serial number. And I'll say, well, $1 is just a piece of paper with a number written on it. I mean, what's the difference? The difference is the dollar is backed by the U.S. economy. Well, the U.S. economy is protected by the U.S. government, which I believe, or by the U.S. military, right? So when you look at an empire, or you look at whatever this is, we are a republic, or I don't know what it's called, but you've got the world's largest economy in the history of the world, as far as we know. You've got probably the world's most powerful military in the history of the world. We have military bases in all 195 countries around the world. You have the backing of this machine. It's not just we all decided this piece of paper with numbers on it had value. It's backed by this giant empire that supports it. So the other countries just don't have that. They don't have the GDP. They don't have the economies we have. They don't have the militaries we have. So it is what it is. We're 5% of the world's population, and we're the world police, and the world. Of course, there are other countries right now that are moving away from our currency. China and Russia trying to decouple from the U.S. dollar and move into.
It's important people don't realize they're not trying to take over the world currency. They're trying to decouple from it, and that's another podcast. I feel like we should move on to Trevor now.
Okay. It's like being reliant on oil outside.
I did have another question.
Same thing with currency. Oh, Dane has another question.
Just keeps on going.
Are the central banks of other countries viewed? Because now you got me thinking about why ours is actually the biggest reason that the Fed helped us, in my mind, was that it became the lender of last resort, right? And so it became this, hey, no matter what, when you go to the bank, if you need to pull your money out, you can pull it out, right?
Yes.
And so, like, what's the assurance with other countries? Is that why we were able to grow so fast? Because everybody had so much trust in the bank, in the central bank, the Fed, that it was all of a sudden like, hey, we're actually going to leave all of our money in the economy, and so all of that money is constantly being productive instead of this fear. Because even if people had 20% less surety that they could get their money out at any time, that's
value.
20%
That's a value
less
component.
money that's being kept in.
And that's why the American dollar has been purchased. There's arguments now that other governments no longer want to buy our debt, not dollars, but our debt, which is a whole nother discussion. But the best way to contrast that is, yes, it comes down to, am I going to get my money back, and what's the surety of that? And the easiest way to just contrast it as extreme as you can. So Germany after World War I and after World War II, their debt went to shit because no one wanted to own their debt because no one had faith that they would repay their debt. And so, and I don't know the ins and outs of how other central banks work, so I don't want to act like I do.
I think you should.
Yeah, so you're talking about FDIC though. You're not talking about like the Fed. The Fed was designed to control employment. Keep the unemployment low, keep inflation low. Right. FDIC is just an insurance that if you go to the bank, there's a bank run.
That stemmed from it, but it was also that you always had a bank to go to. So
the government did, because all they have to do is
but here's how they create backstops, and this is really important, because we have one expiring here in just a few weeks. So like when we had the bank liquidity crisis last year, so the concern is all those deposits at all these high-end banks, they're not FDIC insured, because they're most of the depositors were
way higher than
really wealthy, right? Yeah. So what the Fed creates a backstop by just adding liquidity. So they didn't add insurance to the depositors, but they said, hey, the reason depositors are potentially running is because they're concerned you don't have liquidity, because if you have to sell bonds, they're worth half of what they are. So we're going to give you $1 for $1 on all your bonds. You give us your bonds, we're going to give you a line of credit. It's here for a year. You can draw on it, you can pay on it. So that expires, and that's going to be the next conspiracy on why we're going to go into a fucking recession, and we're not, because it really doesn't have anything to draw on it. They recently increased the interest cost on those lines of credit to keep banks from just pulling on it to use it intermittently while they can. But so that's just an example of, like, they're the bank of last resort because they're the bank to the banks. And even when you go into your conspiracy theory is, well, why do we want inflation? Well, we want inflation because we want to be borrowers, so we pay down debt with the lower dollar. And that's, you think, well, then the Fed doesn't want that. But what we need to understand is, because the Fed's a banker, the Fed is a lender. A Fed is a much bigger borrower than they are a lender, because they force all the other banks to put deposits on at the Fed bank. That makes them a borrower. So yes, they are a lender to our government, and they are a lender in all these other credit facilities, but they borrow a lot. I don't know where we went on that train.
No, that was good.
Can we ever get off this fucking
Trevor.
tangent?
Trevor, can you please take control of this?
Rein us in, Trevor.
Are you guys done? You're not going to cut me off again?
Hopefully there is some value there.
It's a fun conversation.
All right, Trevor, go.
To be continued. Yeah. We'll do this intro again.
You want to talk about creation of money versus
that was your episode. Like, so 1913.
No. I shouldn't have said anything. Okay, next time. Fractional reserve banking system and money creation. We'll talk about that later too.
Oh gosh.
Yeah,
don't get me started on that.
Okay, so I want to dive into some things selfishly, like I always do.
He's so selfish.
The real truth of the Deal Junkies podcast is for free coaching for Trevor.
So listeners know we used to sit every Tuesday in a room, me, Gabe, and Dane, and then bring in people like Mike and talk about all this stuff. So we're like, we should just record it. Now that you guys are doing all the podcast stuff, we get less free coaching. So I'm trying to do some of that right here.
Effectively true.
So if this didn't seem helpful for people, we can cut it out later, but I still want to do it. So basically, I wanted to go over kind of what me and Dane are doing with our company vision, get Mike and Gabe's thoughts on it, and we'll give you some background too, and just see what you guys think, feedback, and whatnot.
I love it. This is getting behind the skirt. This is how deals are done. You got a vision at first.
So, Gabe, you'll know 100% of all this stuff, but not the names by what we call it by. So, EOS, Employee Operating System, it's from this book, Traction, by Gino Wickman. It shows people basically how to start a business, how to run a business, all these basic things you can do to grow and scale a business. Mike runs on it too. I think you find it really valuable, correct? Like you told us one time you paid like $5,000 a day to someone to like come.
Yeah, my business coach comes from the Traction community. Yeah.
So we've used this. We implemented a year ago, and we've been doing more deals than we've ever done from doing it. Part of it is coming up with a vision for your company, which was like the hard part for us. So we've been kicking it around. and kind of why I wanted to run by you guys to see what you thought of this vision and what we were trying to do. So we were trying to buy as much real estate as possible, right? And we were trying to figure out how does that fit with brokering these deals. So the vision we came up with, and Dane, you can jump in whenever, is our goal right now is to broker as many deals as possible and make as many millionaires as possible who know, like, and trust us, from whether that's someone who's already investing, someone just getting started out, showing them how they can do it, because anyone can truly do it. And we're trying to help. This year, we want to do 60 of them, then scale it to 100, right? And then that's 100 new people. They're repeating that each year, every 1 to 2 years. You wait 5 to 10 years down the road. Now you have all these seeds you've planted of people who know, like, and trust you that you can take with you into bigger deals later on. Mm-hmm. So, like, now we have all these deals of people we've made them millionaires. They have all this equity in the homes. They have all these cash flows. The houses aren't that cool. You can make way more money in big apartment deals. And you take all those people with you into a big apartment deal. And selfishly, we get to buy way bigger deals 10 years down the road.
Yeah. Yeah, I mean, you guys have the same model I do. You want to do it with 100. I did it with 1. Paul Curley. And we took him from
fish, though.
We took him from $17 million net worth to $200 million net worth over the course of about 8 or 10 years. And I think that the way Paul describes it is, I say he made me, and he says I made him, and so that's a good partnership to have. But the way he words it, he said we grew up together. And so when you're getting started in brokerage, especially in the investment side, to go out, and not all of those 100 people that you put into a rental house or a duplex is going to end up becoming, the next person to own 1,000 units. Some of them will be happy when they get to 5 or 10 or 20, and then that's sort of done. And what I found over time is I did the same thing, and I had other clients, and I still do, but you kind of you find the folks. Right now, you're very transactional. You're dealing with a lot of people, doing a lot of deals. And for me, anyway, over time, I just decided I wanted to do deals with friends. And so I found a few key people that I got along really well with that wanted to do regular business. And my mentors always taught me, or my main mentor who taught me real estate told me I needed 5 key clients to do what I wanted to do. Now, I wanted to broker in the $5 to $20 million multifamily space. That's what I set out to do when I started. And so it's a different mission than what you guys are on. You guys are out minting the next generation of millionaires, and you're doing it through real estate acquisition and showing people how to leverage into their first deals. And I think it's amazing. I think it's way more honorable than what I did. But it's the same idea, the same principle. And so you're asking me if I liked the model, or what is your question specifically?
So our fear, because to actually make this work, right, we have to commit 5 to 10 years of time of doing this.
So you said something about you're going to go into deals down the road and you're going to take these folks into deals with you. So you're talking about turning fractional partnerships or client relationships into a syndication model down the road, essentially. Correct. Like what Logan and I have done with the SMI fund.
Correct.
So we take, over time, we buy a duplex, a fourplex, and eventually we're buying 100-unit complexes with our partners. And then we decide this is way too fragmented. It's way too hard to manage. Let's pool all the resources together, launch SMI fund management. Let's go out. Now that we have the reputation, people want to invest with us. They want to come with us on deals. So it's really very similar. I think Logan, we interviewed him last week, and I think you guys could say, I mean, he's one of the most brilliant minds I've ever had the opportunity to be around. And this is exactly the direction he went. As he started with brokerage, started partnering with some of his clients. They started small, they grew up bigger, and then eventually everybody trusted him and his judgment. And it took him about probably, I would say, he said he was 34 years old. So I would say it took him probably 12 to 15 years. And now he's off to the races and out buying deals all the time with other people's money.
So there's 2 thoughts on that. So the first one is like, yeah, we have our core clients that we're actively buying deals with now. But I'm talking about doing this on scale. So like 60 new people, right, in our market alone. Those people are buying a deal every year, every other year, and then taking that to the next market, and then to the next market. And then only 5, 10, 15, 20% of those people will like your future vision.
Is this your EOS thing you were just talking about?
So and then it yes, that's part of the vision, but then it's diving into like EOS, like how are we actually making this happen right now? And I just want to see, do you think it's realistic? And then based on what we're doing now, like, does it make sense to do?
So you're going to build out a model where you help all these folks get into real estate and then grow them up over time and then spread to other markets.
So I would like to do it faster. So right now, have you seen the classes we're doing?
Mm-hmm.
Yeah. So the goal with the class is to get 5 people every single month who are ready to buy deals, right? So we're running through the ads, learning how to market, do all that stuff. We have all the information. Like, we can truly help people do this. That's not the problem.
Yeah, the case studies and the track record of proving it.
Yeah.
Yep.
So it's, can we get in front of enough people to do so? First one we did, 50 people sign up, 20-something show up, 3 sign up, right? And that's on our first go around. So we were like, our goal of 5 seems super reasonable after.
And that's your 60 comes from 5 a month for a year.
Yep. And then that, because these are all people, I don't know these people for...
The 5 people came to your class or the 5 people bought a deal from you?
No. So at the end, we have them sign up to work with us as clients. And then it's, once they're signed up, they will buy a deal within the next 90 days.
So the goal is 60 clients, but not 60 deals out of those clients, right? That'll dwindle down.
No, both. So the ideal
100% success rate.
No, because we'll put 40 people in the class.
Yeah.
So we'll have
So
40
you're saying
people in
every
the class.
client
5
gonna
of
be
those
a buyer.
people will actually sign up, pay to work with us, and then they're set up to be looking at deals all the time. And I do think, like, based on the structure of the class and then what we're telling them, that's going to be a pretty good hit rate.
You're baking it into your 100% success rate's already baked into that number.
Yeah, we're 100% successful 30% of the time.
Yeah, I get it. Yep.
Yeah. So, right, because now we have these people who see the ads. We don't know them. They see kind of what we're doing. They see us sharing all this information. Like, we just, like Gabe, we tell everyone exactly what to do for free. Like, here's all the information. But then I think I can take that next to Portland, right? So then I can do 60 there. And then to Eugene. And then to Bend. And there's not really a stopping point to where you can do that.
So you're now talking about scalability. How do you reach a broader audience, and how do you scale your model? And so then how are you gonna serve those 60 people in each?
So my question first is, before that, should we do that? Do you like that idea? Because we have to commit to, like, that's a big thing to go do.
I mean, to me it sounds like a lot of seeds, and if you go plant 6,000 seeds, how are you going to manage what that turns into? For me, like, I can remember, a couple of the old school brokers, and we have some guys out of Portland that are really hardcore about the way they make their calls and stuff. They make, some make 50 calls a day, some make 20 calls a day. I said, guys, if I made 20 calls a day, if I made 20 calls today, I'd be working for the next 6 months. I'd never be able to pick up the phone again because I'd be doing so many deals with those 20 people. I'd never pick up the phone again. So I get on the phone and I spend 2 hours with somebody on the phone, not 2 minutes with somebody on the phone. That's just who I am. It's my personality. Mm-hmm. Not everybody's wired that way. Some people just want to roll through it, right? So you guys have to decide, how are you going to manage that business? To me, you could take what you're doing now, and you've been doing it for a little while, and in the next year or two, you could take these couple hundred people just in this market and turn that into, I mean, think about what Logan and I didn't scale at all. He dealt with Corvallis and I dealt with Salem, and we met some people over time and we bought a few things together, and just over time it gradually grew into what it is. And now 10 years later, we're out building this giant fund together. I mean, I don't know how we could manage anything more than that. I like the way you're thinking. You're thinking big. Like, how do we go raise $150 million? How do we buy real estate in all 50 states? How do we, plant these seeds? My question would be to go to the end of what it is you're trying to do. Are you trying to mint, 10,000 millionaires? Is that the goal? Because you'll do it. But are you trying to build something up to where in the next 5 to 10 years, you can start pooling resources together to go buy bigger deals?
I see this as a method to acquire all the real estate.
Okay, so if the end goal is to acquire all the real estate, and you want to utilize all these relationships and all this money and all this equity that you help people. So what you're doing, so the selfish gain is that you help people become millionaires so that in turn they can come back to you.
They reinvest.
And they reinvest and they go into future deals. I personally think that if you try to run a machine, and Mike may have a different idea on this, but I think if you try to run a machine where you're stacking 60 or 100 people a year in every single market, that's a cool machine, but I think your bandwidth is all going to be spent on building and running that machine, not what the final goal is in syndicating larger deals and owning real estate down the road. You don't need 1,000 people to go do what you're trying to do. You need just a handful. You have the right people.
There's a lot of real estate, though.
Yeah, it's funny. Like,
Yeah. So we were looking at how many apartments there were, and we're like,
apparently these guys are hungrier than we were.
Trevor wants to be the next Blackstone. That's where you're going.
No, I'll speak on his end because I did not initially see this at all either. I had the same apprehension as you, as I was like, well, our end goal isn't to be residential brokers, and that's just turning us into a really good residential brokerage. But to speak on his behalf, his goal is to get it to the point where we've created this class. You've created a website that's a total lead magnet. You're pulling all of these people into it. They're just seeing ads. The class is no longer taught by Trevor. It's a webinar. And then you have active people that are answering any questions that come up afterwards that aren't us. You have your FAQs. And then all we're doing is funneling all of those leads to another broker in a different market, and we just have a referral agreement with them. And so it's like, hey, if you're going to use our course so that you can launch your brokerage, then we have this agreement that just gets us here, and then we also get to keep touching all of those investors for the next 5 years.
I just figured out what you're doing. You don't want to be the next Blackstone. You want to be the next Grant Cardone.
Open door capital.
That's kind of what it is.
Yeah.
I would rather be Blackstone, though, so point me in the right direction.
I mean, so
want Mike to like me.
Grant Cardone went out selling systems, built the name, built the reputation, did whatever, and then they didn't help. They gave people an opportunity to invest at a very small level, but the idea was to build that empire so that when you decide you want to go do $100 million deal, all you got to do is get on Facebook and record a video and go, hey, we're raising $30 million for this, and everybody goes, oh, it's Grant Cardone, and they put money in, right? So there's really, to me, you see a lot of people doing this today. They don't like a Grant Cardone. He probably doesn't have the gears that you think he does, and he probably actually doesn't even have the wealth that you think he does. But what he does have is the fame. He has the...
You think so?
Wait, hey, before you say that, he's suing someone for $200 million.
Defecation.
After that,
My friend Jamie interviewed him about the defecation.
It's defamation, not defecation. No, you're thinking of Johnny
defecation and defamation go hand in hand.
To say soon a tenant?
Mike was confused with the Johnny Depp Amber Heard trial. That was defecation. This is defamation. So what you guys are talking about is you're talking about building a machine, right? And you have to decide what machine you want to build because every machine has a different purpose. And so the machine that you're trying to build, the end goal is for you to own all of the real estate or as much real estate as you possibly can. And your idea is let's utilize the relationships that we have to go do that. I think you can skip all of the stuff that you're talking about if you could learn to go be famous like Grant Cardone and run a sales course. Who is the guy that Devereaux, or there's a guy.
Oh, Devereaux.
Is that his name? Devereaux?
I don't know the name.
Remember there was a guy, they go to his class and they pay him like 70.
There's a bunch of them. We just went to one.
Yeah, so
we did.
How much did you pay?
We didn't pay anything, but you could have paid $20,000.
Shout out.
Okay, so you pay them and then they tell you to go find deals. And then they'll allow you to come into deals with them, right? I mean, like you get people to pay you for the opportunity to bring you deals.
We do want to do that too.
So
Tyler Devereaux or something like that. Does that sound familiar?
I got
8 phone calls one afternoon from these people, and they all read the same script. And I said, and by about the third call, I go, "This is interesting. Did you guys just come out of a class?" And they said they came out of a class where they pay a whole bunch of money, a lot, like $20,000 to $50,000 or something like that.
So the cool part is that's what I've been spending my time doing, but I still have Dane and all his time.
Yeah.
Well, it's still just one person.
all right, can I fucking chime in here?
Yeah. Mike.
Oh, now it's Mike's turn to win.
Can I just say all the ways I agree with Gabe? So I have a similar thing that I say exactly what Gabe says. It's different though. It's not relationships, it's sellers. So you can accomplish all your real estate investing dreams you want from 5 sellers. You want to buy 5,000 units, you meet 5 sellers with 1,000 units each, buy all 5 of them, right? All their portfolio. I also agree is you need to see, so why are you building it? I 100% agree with building a machine, ideally a machine in the industry to create relationships, cash, real currency, social capital to then trade that for real estate. The trade-offs are, how are you getting there and is it going to keep you from doing it? So you can go the Grant Cardone route, which seems really hard. Why don't you go the Brandon Turner route and have a really badass fucking podcast?
Here we
build this podcast
the
up
Deal
to what
Junkies
it is
syndication.
And do deals with the 4 of us. Don't build, like, just let us ride your wave. Remember,
because you guys run out of money all the time.
Oh, you don't need money. You don't need money.
That's a great point.
No, but so here's the thing. You become a millionaire investing in real estate, become a billionaire building businesses. And where I'm going with my business right now is I don't have real set metrics on what I want my business to become. I have set metrics of where I know my investment company is going and then what my businesses need to become to service that. Does that make sense? And so then that drives the level of staffing I want. And then I want to make sure I have really good people in my company.
So are you thinking, what's your bigger goal with you personally, the business or the investment company?
The investment company. Okay. But I've created an ecosystem, and that's what you're talking about is your ecosystem. And what you're deliberating is you're going to build an ecosystem. You're just saying what's it going to look like and what is it that we're going to build? And so mine is just the spear of my ecosystem is the acquisitions. And so that's my development company. That's why I'm a trader. And then I build a portfolio from that, which then has my property management company and the amount of developments I do. Now that's the brokerage side of it. And then coaching goes through brokerage as well. So that's my ecosystem. You're talking about building a brokerage business as your ecosystem. And that's your tip of the spear, which now it just comes down to exactly what Gabe's saying. How well can you service it? And so then that comes down to how many how many Danes can you get and how many Danes can you train? And that then comes down to your magnetivity, right? So Gabe, when we talked about his episode and his story, he's a big, huge magnet for people. He loves people. And so people rally around him and they invest with him and just they want to give him his money and they want to do deals with him. And so then I would say, is that the type of magnetism that you guys have? Because if that's the magnetism that you guys have, then you can easily grow your brokerage team. You can spread that marketing out there and you can be investment brokers to then grow it's just like a newsletter, except your newsletter are actually clients that have transacted with you. So it's a much longer growth process. And I think that's what kind of Gabe's getting into is the trade-off is huge to go down that route where there may be some other faster ways to get to the same end goal.
I think it'd be way more cool to help 1 billion people become millionaires than it would to become a billionaire. But that may not be the goal. If the goal is just to own big deals or to own as much real estate as he possibly can, Logan would tell you he retired his brokerage license and just focused on doing deals because brokerage wasn't the way for him because that got him hung up in the weeds of it's very arduous and time consuming to broker all this business, especially residential business, right?
So yeah, I'm not trying to broker it. Like
he's the lead magnet.
Well, you're not, but you're trying to build a team.
It's a team model, yeah.
Mm-hmm. You're trying to build a really large 1 to 4 unit broker team.
Mm-hmm. And so you control the marketing and you control the lead training aspect, but you're not involved in all those deals. Now, the question is if you're not involved at that lower level, does it actually create the goal you want, which is funding a syndication model?
Yeah, because that person at the bottom that had no access to Trevor Howard, right. 5 years from now, you go, hey, you went through my team, Vesta, and we got you into 40 doors, and now you're worth $10 million or whatever, and we want to utilize some of that to go into a deal. You can go ask them, will they invest? It's just like me. So, I have the SMI machine, right? We just say we want to go out and we want to raise capital. We want to do this big deal. We go out and we tell everybody, hey, here's 500 clients that we've worked with. We want to raise money to go do this deal. And, there's 10 or 15 of them and go, sure, I want to come into that deal. But over time, we had to manage for a lot of people. We had to broker for a lot of people. We had to build. I mean, SMI is a 48-year-old company. So you have this branding. You see all the money that I spend putting up billboards and doing all the other stuff. So part of that, my selfish goal is that I want to own more real estate. And because I have this machine that finds deals and wins deals and finances deals and manages deals, it's easier for me to own more real estate. And people trust me more when I go to them and I say, hey, will you carry a contract for me? I own this SMI company. So at the end of the day, what you're really talking about is building a reputation, and you're talking about building a brand. Who is Trevor Howard? Who's Dane McKinney? What is Vesta? What are you guys doing? And Mike, to Mike's point, and the way I see this is like you described a path that takes a lot of effort and a lot of time. And Mike just told you a shortcut. Just get famous on a podcast and then tell everybody to invest in your deals. And you skip the whole other part of it, right? Now, is it easy to get famous on a podcast? I don't know. We'll find out, right? I for me, selfishly, I hope we don't get famous because that's not what I'm trying to do. I just want to do more deals.
People just call me, give the money to Mike. Forget Gabe.
Well,
I think we just want to do too many of them.
how many listeners do we have?
5.
Oh, 5. Okay.
5.
Yeah.
So the 5 of you listening right now,
It's
let us
my
know.
mom, my
I
dad,
was going to say, wait, who listens outside?
Trevor's mom and dad.
Does your mom want to invest in any of our deals?
She is invested in my deal.
Oh, okay. Good.
Just don't tell her that
Okay.
yet.
So when we do a deal with Mike, don't forget his mom's got money.
Yeah.
All right. So synopsis.
It's because she didn't have to spend it on me.
I guess we should clarify too that my goal is to do what you guys are talking about on the commercial side. So I'm building out the commercial acquisition side, and then I'm building out the investment branch
We're trying to build
of the
a
company.
two-headed monster.
Yeah.
Brokerage and investment.
Yeah. I mean, that's why you're under contract on 5 deals with us right now.
Hey.
It's because we're doing.
See, this is already working for me.
Yeah. I know. We just need to find more.
Why would I want you to have 1,000 more clients?
Right.
You already got.
Wait,
Yeah.
how did you, so at some point, some kid's going to text me to ask to go to lunch with me, and then he's going to start bringing me deals?
No, I just feel like if you put good things out in the world, good things come back to you.
That's Trevor's argument with the residential side.
Mm-hmm.
What?
Yeah. Is that we just got to put enough people into enough deals that at some point.
And here's the thing. What I heard from that is my favorite Zig Ziglar quote, which is, I want to make so many millionaires in the world that I'm going to get what I want eventually. Mm-hmm. And I love that mindset. You just have to always evaluate what's the trade-off. Is it keeping you from your goals? And don't let that take over.
So I want to ask you a question. When you say you want to do big deals, you want to own all the real estate, do you want to own all the houses in the country, or do you want to own like 500 unit complexes, or what? How do you vision this? Both?
I think you can do both at scale because I think people own portfolios of houses. Like if you go buy a portfolio of 500 houses versus a 500 unit apartment complex.
Okay.
I'd rather have the 500 houses in that case, depending on market. But
Okay, so here's where my mind goes. If I want to own a 500 unit apartment complex, or I want to own a portfolio of 500 houses, I want to go start hanging out with people that own 500 unit apartment complexes. I want to go start brokering deals for people that own 500 unit apartment complexes. I want to start hanging out with lenders that do loans for 500 unit apartment complexes. Like you're talking about finding the most efficient path to your goal. The most efficient path is forget about the house and go start doing a 500 unit deal today.
So a combination of that is you do need to make a lot of money. I think this is a business that makes a lot of money at the same time. So
Okay, so now you're getting into the now money, tomorrow money thing.
Yeah.
So the 500 unit complex
It's both.
is the future for the future, but you want to make your bread on selling houses.
And what I would say is I think you're putting more value in the back end than you're going to receive, and not seeing how much value in the front end you're getting.
Well, I think there's a ton of value in the front end too, but I think there's also a bigger vision of like, yeah, you go make 10 grand per house or whatever. But if you think about how much, if someone buys 5 houses and you wait 10 years, that's a lot of money just sitting there. Like if you're thinking about it on the back end, that's millions of dollars. So your 10 grand, your 50 grand in fees is multiple millions of dollars
For investment down the road, but you have no guarantee that they're
Right.
going to
No,
invest in it.
you don't.
But I will say this, every educator out there, they do it to build syndication models. That is the model of every podcast, all the raise whatever you went to fest. That is there to raise money to do deals. And any education system, any group, any system you grow, that's what they want. And so you're just doing it a different way. You're not saying, hey, give me money, and whether you're successful or not, I win. You're saying, I'm going to help you do a deal. You're actually going to be successful, and I'm going to build a relationship with you. And if I do that enough times, you're going to come back to me in the future.
Did you ever ask me why I wanted to broker in the $5 to $20 million space? Why did I pick
You told me
that?
it's efficient.
I know why.
Why? Tell me why.
You told us that it was because the institutions did all the bigger deals, and you didn't want to do the small deals.
Well, from an investment standpoint, I agree. But from a brokerage standpoint, I think I have a mind similar to Trevor's when it comes to looking for efficiency. And I saw how much money that you make when you sell a house, and I saw how I actually didn't even know. I hadn't brokered a deal, and I asked my mentor, well, how much money do you make? As a deal gets bigger and bigger, the commission percentage goes down and down and down. And so what I was taught was once you get to a certain point, you hit back in those days, if you hit $100,000 commission, nobody really wanted to pay you more than $100,000 to broker a deal. Okay. So where is that point at? That was like a $20 million deal or whatever it was back then. Right. So, or maybe it was 5 or 10 million, but anyway, like the point is that you make the same thing brokering a $20 million deal as you do a $100 million deal. And so, well, why do I need to run around and look for $100 million deals? There's a lot more $5 to $20 million deals. I'll go work in that space. And now today prices go up, the fees you can make, $200,000, $300,000, $400,000 selling a big complex. And so the efficiency is I don't have to have 1,000 clients. I can go broker 4 or 5 deals this year and make $1 million on the side brokering because I have those relationships with those people who have the means to do bigger deals. And so the fees are just bigger. I'm just playing in a bigger, it's a smaller pond, but it's a bigger fish. I'm just playing around with bigger deals and, bigger investors is all. And so in the end, when you go back to like Paul Curley, when you look at my schedule of real estate and you go, well, Gabe owns, $50 million of real estate with Paul Curley, I wouldn't own any of that if he weren't my client. So brokerage is what got me there, but I had to take him from 17 million to 200 million. And I just did it with one client. Now he's a special guy, and our relationship, it might be different than every, broker client relationship, but we became close friends, almost like relatives through this process. And then he didn't have partners, and he actually came to me and said, I formed an LLC. You're 50% owner, and you're the managing member of it. I didn't ask him to do it. He came to me and said, we're partners now. No other partners. So I earned my way in. It took me close to a decade to do it. And in his mind, I made him, and in my mind, he made me. Now that's just one. That's not hundreds. So you guys are approaching it from a different angle, which I think is cool, by the way. I'm not trying to poo-poo the idea, because I think your legacy, when you really think about it, it's like, well, do I want to be a billionaire, or do I want to fly a jet, or do all this stuff? And all that stuff is kind of boring, to be honest. When it gets down to it, when you can say like, Jaron comes on the podcast and tells us how he's a 23-year-old multimillionaire, or however old he's going to be when he becomes a multimillionaire. Like, that is way cooler than a jet. Yeah. I don't care who you are. Yeah. Like, helping people find financial freedom is going to be a much bigger legacy than any of us, how many deals we do, how many doors we own, how much money we make, and the toys that we have. That is sort of a byproduct, and it's fun, and we want to own islands and fly jets and do all that just because it sounds cool. But the reality is, like, when you really think about having a rich, fulfilling life, helping other people do what we're doing, which I think is the reason why we have this podcast, is we're giving this information away for free, and it is completely attainable, and we help people understand that they also can be financially free.
I think you just signed off of approval.
Yeah, I'm fired up. We should take a break on that. Also, side note, my Paul Curley happens to have his brokerage license and owns the brokerage I work for. So that's Gabe, by the way, for the listeners. Yeah.
Yeah, we're having a father-son experience, aren't we? We just bought a fourplex together. I had to co-sign for Dane to get him his first fourplex.
Gabe's moving into a fourplex.
How many units do you have now, Dane?
Did you get a credit card yet? Do you have a credit card
15. Yet? I got a credit card yesterday. Yes. Okay, by the way, for everybody listening, if you are an authorized signer on a credit card, and if you have 2 credit cards for businesses that you own, none of those count towards your own credit. You will have a credit score, but if you try to go get a loan,
it doesn't count.
You're going to have to call your boss.
Okay.
You mean your creditability is more than just your score?
So Dane, you tell me how old you are again.
24.
24.
Yeah.
And you said you own how many doors now?
15 doors.
You have 15 doors. And you're going to live in this fourplex we just bought?
I am. Yeah.
That's sweet. So are you going to pay rent?
Yeah. Trevor said I have to pay the same amount of rent that I'm currently paying
Okay, good.
in the house that I live in.
So you have 15 doors. You're going to live in one of your fourplexes.
Mm-hmm.
And are you okay. And are you a millionaire yet?
I don't know. What does my SREO say, Trevor?
No.
Yeah.
No, he's not there yet.
Full disclosure.
Levered too high?
No.
When will he be?
Probably. I've also never put any money down on a deal. So
you're generating it out of thin air.
yeah.
He's printing
I
money.
am.
Oh, he owns 15 doors. He's never used down payment.
That's
read
a lie.
about the
That's a
Fed.
lie. He put $1,500 into one deal.
Which one? I did.
That's
do
a lie.
that.
And
I've spent more money on deals that we didn't close than deals that we've closed. Hey, that's a good lesson.
That is a good lesson.
Yeah.
Only spend money on due diligence if you know you can spend less on the down payment.
Yeah.
Oh, that's fun.
Substantial.
See, I get a lot more joy out of that. I get a lot more joy out of knowing that Dane owns 15 doors and
So that was a little ego
and-
stroke, a little edification.
it's like I can see now why Paul enjoyed working with me and doing the deals that he did with me because it's fun.
He's under contract on though 60 more right now.
60 more
Yeah.
with no money. He's got.
We'll
you've
see.
thrown fees at some.
Why do you think they went to Raise
That is
Fest?
true.
They got to go
That is
raise some money now.
Yeah.
Too many deals in escrow. Let's go pay someone to tell us how to raise money.
I'm glad that this didn't come out like a month.
Did you learn anything?
Yeah.
Did you?
It was. They gave helpful information if you want to go build a money raising machine.
Yeah.
Did they tell you?
No, it was really
start a
good,
brokerage team to raise capital.
I didn't
They did
realize
not.
that our goals were so much different, I guess. I should have realized. I was
You
told
and
by-
Trevor's goals were different.
No. Then like the
The
People there
at
just
raise.
want to
Gotcha.
collect fees.
yeah.
They want to go raise money.
their
collect a fee.
syndication. Yeah, their fee.
Which
model.
actually worked well because there's a lot of people doing the fund of funds, and so I had a number of good conversations.
There are a lot of
with
It's
people
like
doing
talking
fund
to a
funds.
broker.
What's fun to
Deal.
fund?
So
You create a fund,
of
so you
funds.
pool money just so you can use that money to put into other funds.
Oh, okay.
Mm-hmm.
So it's the legal way to raise money without a money raising license for other deals that you're not actually a part of.
So how you like to find deals from, you go talk to a broker, they do all the work. You go talk to the funds of funds people and they go raise all the money for you.
which is sick. So you just have to build a relationship with that one guy.
Yeah, so you need an Instagram influencer
Yeah.
that, has 1 million followers, and then they say, hey, go talk to my friend Gabe. And
So there's somebody who's going to listen to this podcast that's got
that's why we're doing this podcast.
$100 million to place. They've raised the money and they're going to come put it into our deals. All right.
That's the goal. Yeah, we didn't tell you that's why we started this.
I thought this was just for fun.
But who gets it? Like, I'm not part of, like, we have to start our own little
Who gets it?
LLC.
I was thinking, have you heard of SMI Real Estate?
Deal Junkies Investment Fund firm.
There's a merger coming
I
here.
think there's an M&A on its
The
way.
SMI bird.
Congratulations on the merger, by the way.
Thank you.
Yeah.
Yeah.
Gabe is now officially a fucking competitor in my backyard. Like literally a half mile away from my office, just came and dropped down. I'm now 8 times larger than you in your backyard. Thanks, buddy.
All you have to
Appreciate
do is just buy a deal.
Different goals.
and then we can be partners, and
It's
it all
easy.
doesn't matter.
It's easy. Yeah. Take somebody to lunch and go, hey, I want to buy your company, but I don't have any money.
Is that how it happened?
Actually, I bought a 41-unit apartment complex, and I strategically gave it to this management company because I liked them, and also because I wanted to build a relationship with them. And we went to lunch, and while we were at lunch talking about the property, I said, I'd like to go to another lunch. And we went to another lunch, and it was just me and the owner, and I said, what are you going to do? He's 73, and he said, at some point, I got to retire. I got to sell this thing. I said, good, I want to buy it. And I said, you need all the money? He says, nope. I said, good. I want you to carry a contract. He said, yep, that sounds good. We pieced it together, and we just picked up 63 employees and 2,300 more doors to manage. So it's just,
Art of the deal.
it's magic.
I think I know our first deal together. we're gonna go buy a management company.
There you go. Now we're talking.
Might be right down the street from the last one you just bought.
All right, guys. Thanks for joining us. We are the Deal Junkies. Hopefully you got something out of that crazy episode. We will be right back to talk about, I think we're going to talk about bad deals.
Yeah.
Oh, this is going to to be interesting.
The people ask.
We don't post this right after this. We'll be right back for you.
Okay.
Okay. We'll be back in a couple days.
In a couple of days, look for episode B to come out on this podcast.